Good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, August 16th. We weren't in the office Friday or Monday, but we did liquidate a correlation position on Monday. We'll get to that in a second. We did have 5 trades between Monday and Tuesday, pulled out the total of 21.7 pips. But we'll get to that in a second. First, some of the economic news, because there was quite a bit since we weren't in the office for a few days. Producer prices unexpectedly slid, missing expectations. That was Friday. Core retail sales tumbled most since January. They came in at no growth at all when it was expected to come in at 0.4% growth. That was also Friday. Fed fund futures on Friday were pricing a 50% chance of a rate hike come March of 2017, so March of next year. Let's see what else on Friday. University of Michigan consumer sentiment missed estimates 90.4 compared to 91.5. The Fed's Bullard was out. He said he sees just one rate hike in the next few years. He said Fed can't influence U.S. productivity growth rate. Let's see what else. David Tepper, one of the largest hedge fund managers in the world, he basically caught the, they call it a bearish billionaire bug. He's become bearish. He's cut his exposure by a third in the past quarter. Some other news that broke over the weekend. The Bank of Japan will be the top shareholder of 55 companies come the end of 2017. If they continue with their QE program at this pace or even increase it, they'll be the top shareholder of even more companies. It's absolutely amazing, unprecedented. We've never seen anything like this in the history of finance. Japan's second quarter GDP came out and missed estimates, unchanged from the first quarter. Business spending and exports slid. Negative interest rates in Japan can't even create economic growth. It's again, it's unprecedented. Let's see. Yesterday, the Fed's Williams came out, and he's calling for the Fed to rethink its monetary policy, which not surprising coming from Williams, as he does. I don't want to say think outside the box, but he does speak his mind. And we've been saying it now for over 2 years. The Fed policy, central bank policy, just hasn't been working. It hasn't done what it was what the theory said it was going to do. And here's one of the Fed members admitting the same thing. Royal Bank of Australia last night, latest inflation data was in line with its forecast. CPI data confirmed inflation to remain low for some time. They don't have negative rates, but they have zero bound rates similar to the United States. So here again, it's another country with zero bound rates that's not seeing economic growth. This morning, housing starts beat a lowered estimate. So that's good news, but it is a lowered estimate, so I don't know how good of news that really is. CPI came in as expected. If you back out food and energy, which you really should to look at CPI, it missed estimates coming in with a lower number than expected. So no inflation there either. So again, amazing. Countries with zero bound rates, negative interest rates can't grow an economy, can't create inflation, and obviously can't create jobs. So I agree with who was it, Williams? The Fed and central banks really need to take a step back and look at what they're doing at their policies with their fiscal policy. Anyway, let's get to the trades. We had this U.S. dollar Japanese yen correlated with Swiss franc Japanese yen since August 4th. We did have a relatively small size, 20% of normal in U.S. dollar Japanese yen. Swiss franc to Japanese yen, 18% of normal. Because it was literally, we put this on at the evening before the non-farm payrolls, which is the biggest number of every month. So we didn't want to get too crazy with it. We were literally flat to down the entire time. If we were ever up, it was so minuscule. I don't even remember seeing it up. So we had an opportunity last night to get out very close to flat. Size adjusted, lost about 2 pips. So we took it and we moved on. So we were short US dollar Japanese yen from 100.944. We covered that 101.270 for 32.6 pips, size adjusted 6.5 pips. And the Swiss franc Japanese yen, we were long from 103.841. We sold that 104.082 for 24.1 pips, or size adjusted 4.3. You know, sometimes you just have to move on and take the loss. Again, it's a correlated trade. We could stay in it longer, but the longer we stay in it, you know, the more interest charges we're going to add up. It wasn't meant to be a pure correlation trade. It's more of a swing or scalp trade that can last, you know, a day or two, which we had one last night, which we covered this morning, and we'll go over that in a second. We did have a scalp in euro Canadian dollar. We had 40% of normal size because we were risking in the neighborhood of about 50 pips, so we didn't want to take a full scalp. Plus, it was going to most likely happen while we were sleeping. So we had the order out there. We had our stops in place, our targets in place, and we got hit. So we picked up 44.5 pips, size adjusted 17.8. You know, the algorithm was showing, to go long at 1.44705 or actually 70. We got filled 705. Ran up. Our price target was 1.45250. So we threw an offer out there because we knew we weren't going to be watching it ahead of that by about 10 pips. So we threw it out there 1.45150, and that's exactly where we got hit, picking up 44.5 pips or 17.8 on a size adjusted basis. It just fell short. Right here is just short of our target of 25. It still may do it if you're in it. Aussie yen. This was one that last night we were correlated with New Zealand dollar Japanese yen. We had 30% of our normal size with Aussie yen and 27% size of Kiwi yen. We would have normally gone a little bit bigger, 40%, maybe even 50%, but I think it's Australia on Thursday has their unemployment numbers, so we didn't want to get too crazy with it, so we went 30% and 27%, and it worked out beautiful as far as what we like to with correlation trades when we're looking just to have one last a day or two, you know. So this lasted literally about 12 hours or so. We were short Aussie yen from 77.190, covered that 0.131 for 5.9 pips, or size adjusted 1.7. And then the Kiwi yen was the nice one. We were long from 72.643, sold 72.806 for 16.3 pips, size adjusted 4.4. So in the end, with all 5 trades, 21.7 pips. So we would take that all day long. Those correlation trades, they pretty much, we made a little bit more. Yeah, we made a little bit more on the Aussie yen, the Kiwi yen than we made on the dollar yen to Swiss franc Japanese yen. Although after the commission charges, maybe finished down a little bit on them. But, hey, we'll take it and we'll move on. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming we get some action tonight or tomorrow. Have a great rest of your day.